As advanced micro devices, Nasdaq AMD commands a live price anchor hovering near $514.39 per share, sporting a massive $839 billion market capitalization after a sharp 6.5% single-session surge. Retail sentiment across financial media platforms, YouTube trading channels, and Reddit subreddits remains sharply polarized. Standard financial media pundits obsess over its trailing and forward price-to-earnings multiples, pegging the P/E ratio above 120, and reflexively type out simplistic comparisons that frame AMD as the perpetual runner-up in the artificial intelligence race. They look at the headline numbers, point to the dominance of industry titan NVIDIA, and sound alarms about valuation compression. But this surface-level retail narrative completely misses the underlying structural reality and the physical engineering bottleneck defining the modern data center landscape. While casual investors fixate on quarterly EPS beats and short-term volatility, institutional heavyheads and hyperscale cloud architects are racing against an entirely different kind of clock: the brutal tyranny of power delivery networks, silicon interconnect density, and the thermal wall of artificial intelligence compute clusters. The real market mispricing in AMD does not lie in whether it can match every single dollar of high-end accelerator revenue printed by its primary rival. Rather, it lies in the catastrophic underestimation of total addressable market expansion for heterogeneous compute. Modern hyperscale data centers are no longer constrained simply by how many graphics processing units you can cram onto a rack, but by how efficiently power can be routed across silicon interposers, how fast data can move across coherent memory links, and how much heat a server cluster can dissipate before throttling performance. AMD's architectural masterstroke with its Instinct accelerator line, combined with its market-dominating EPYC server CPUs and recent strategic infrastructure expansions like its capacity partnerships with Core Scientific and targeted tech acquisitions like Thales, has positioned the company not as a desperate follower, but as an indispensable dual-threat infrastructure gatekeeper. When you look past the superficial noise of retail trading forums where day traders panic over single-digit pullbacks, institutional block orders are quietly absorbing liquidity. Smart money recognizes that the sheer scale of global AI infrastructure build-out is too massive for any single supplier to satisfy. Hyperscalers, from Microsoft and Meta to Amazon and Google, are aggressively desperate for second-source architectural diversity to prevent single-supplier margin extortion. By providing ultra-high bandwidth memory configurations, open-source software integration via ROCm, and superior core density server solutions, AMD has embedded itself deep into the structural foundation of next-generation cloud computing. Behind the scenes of this multi-billion-dollar accumulation phase, daily trading volumes reveal a classic institutional playbook of methodical positioning masking as macro-driven indecision. Every time macro jitters over interest rates or semiconductor export controls trigger a knee-jerk retail sell-off, algorithmic desks and institutional accumulation engines step in to support the bid, steadily tightening the float while shaking out leveraged retail swing traders on Robinhood and Webull. The daily tape displays clear footprints of institutional accumulation, volume spikes during consolidation ranges followed by controlled low-volatility upward drift that leave momentum chasers stranded on the sidelines waiting for a dip that never quite materializes on major trend lines. Retail investors constantly cycle through fear and greed, agonizing over whether a trailing P/E of 120 is too rich, while sovereign wealth funds and pension allocators view AMD through a multi-year lens of secular enterprise transformation. This divergence between emotional retail hesitation and cold strategic institutional accumulation forms the bedrock of the stock's explosive multi-month momentum, delivering a massive triple-digit multi-year return profile that rewards patience over panic. Before we dive deeper into the operational mechanics and the historical shift that makes this setup so compelling, let me ask you directly, are you currently holding a core position in AMD through these volatility swings, or are you sitting on the sidelines waiting for a deeper market pullback to initiate your stake? To truly grasp why AMD commands its current multi-hundred-billion-dollar valuation, we have to strip away the outdated historical framing that still haunts mainstream analysis. For decades, Wall Street pigeonholed AMD as a cyclical, low-margin, value-trap underdog, a company forever condemned to fight a brutal, margin-crushing price war against Intel in the consumer PC desktop space, while scraping by on low-margin console gaming chips. That legacy narrative is utterly obsolete. Under the visionary leadership of CEO Lisa Su, AMD executed one of the most brilliant structural pivots in corporate history, systematically shedding capital-intensive manufacturing by spinning off global foundries to become a pure-play fabless design powerhouse, relying on Taiwan Semiconductor Manufacturing Company's cutting-edge lithography nodes. This transition transformed AMD from a bruised commodity hardware vendor into a high-margin, multifaceted technology titan operating across three robust business segments: data center, client and gaming, and embedded. The data center segment has evolved into the crown jewel, propelled by the relentless enterprise adoption of EPYC server processors, which continue to relentlessly erode Intel's legacy Xeon data center market share due to superior core density, power efficiency, and total cost of ownership advantages, alongside the rapidly scaling deployment of AMD Instinct accelerators. Meanwhile, the client segment continues to churn out robust cash flow through the Ryzen processor lineup, capturing hearts and minds among high-end PC gamers, content creators, and enterprise laptop fleets with the integration of dedicated neural processing units for on-device artificial intelligence workloads. Adding to this operational resilience is the massive anchor provided by the embedded segment, bolstered by the strategic acquisition of Xilinx, which supplies mission-critical FPGAs, adaptive system-on-chips, and networking accelerators to automotive, industrial, aerospace, and telecommunications giants worldwide. This diversified revenue mix ensures that AMD is no longer tethered exclusively to the boom and bust cycles of consumer personal computer shipments, but is instead anchored to secular, mission-critical enterprise infrastructure spending. Looking ahead, the multi-year growth catalysts lining up for AMD are nothing short of monumental, though they come hand in hand with distinct supply chain realities that every serious investor must monitor. The primary growth vector remains the insatiable multi-year capital expenditure supercycle driven by mega-cap tech spenders who are racing to build out sovereign and enterprise generative AI infrastructure. As hyperscalers demand alternatives to mitigate supply chain bottlenecks and cost pressures associated with dominant market solutions, AMD's Instinct accelerators, such as the advanced MI300 and subsequent roadmap iterations, represent the premier drop-in replacement capable of handling massive large language model training and inference workloads. Furthermore, AMD's strategic positioning as a technological gatekeeper extends far beyond raw silicon. Through its Pensando data processing units and comprehensive software development ecosystem, the company is solving critical networking and latency bottlenecks that choke large-scale GPU clusters. However, this growth trajectory is not without friction. AMD remains tightly coupled to the geopolitical stability of Taiwan and the manufacturing capacity of Taiwan Semiconductor, meaning any disruption across the Taiwan Strait introduces immediate supply chain tail risk. Additionally, the company faces the ongoing challenge of closing the software moat established by competitor CUDA ecosystems, requiring continuous aggressive investment in its ROCm software stack to ensure seamless developer adoption. Yet, when evaluated against the backdrop of an expanding global digital economy, these risks are heavily outweighed by the sheer magnitude of enterprise demand. Mega-cap tech companies are locked in an existential arms race where failing to scale compute infrastructure means losing market dominance entirely. In this high-stakes environment, AMD is not just participating in a tech cycle, it is providing the fundamental picks and shovels for the next era of human productivity. Looking past short-term price noise, quarterly valuation debates, and media-driven panic is essential because companies controlling the foundational hardware of the artificial intelligence revolution are fundamentally undervalued over any meaningful multi-year investment horizon.